Welcome back. You're watching Market Fatafat on ET now, and let's keep it going with all the counters that are buzzing as of now. But before that, let me welcome on board Kunal Rambhia on the technical front. Kunal Rambhia from the streets is joining us on the show. Very good afternoon, Kunal. I'll come to you for the first counter, that is SBI Cards. But before that, let me take it up on the fundamental news that we have seen on SBI Cards, where today Jefferies has come out with a note where they say that November 2023, the card data has seen a strong spends growth sustaining. Other than that, the moderation in the cards growth has also been seen. But if we talk about SBI Cards specifically, they have seen a growth of 17% on a YY basis, where the spends have seen a growth of 50% yearly. In November, the industry credit cards grew around 19% and the spends grew 40%. So we have seen that the spends for SBI Cards, that is 50% growth on a YY. This is actually higher than what the industry witnessed on a yearly basis. So an outperformance on that front, where the SBI Cards of the spends has also been sustained at the healthy levels of 19.6%. SBI Cards share of the online spends was also steady at 21%. So on all the parameters, we have seen that if we talk about the industry spends of the credit cards in the month of November, SBI Cards definitely stands out, and that's why it's standing out in this quite a volatile market. It's still holding on to the gains of 1%. But Kunal, like we mentioned that this is the counter on your radar as well. Tell us what's the technical setup for SBI Cards.
Very good afternoon to everyone. So if you look at the SBA card, this is a wonderful update which I'm hearing from you. But this counter was available right near to 20% of the low levels of last 6 months. If you look at the broader consolidation, this counter has been consolidating near to 725, 750 mark. With a healthy volume, this counter is coming out of that consolidation on the higher side. I think one can initiate a buy at the level with the stop loss of 750. And I think the targets on this can be as high as 850 to 860. I think this is a counter which we discussed previous week also. It's gaining momentum. So yes, one can add even at the present levels.
Let's move on and talk about the next stock and next couple of stocks. Actually, we have Allcargo Logistics as well as Allcargo Gati. Both these stocks are on focus. Allcargo Logistics is trading with gains, while Allcargo Gati was a bit down and out in trade. Now, Allcargo Logistics and Allcargo Gati, both these are on focus after Allcargo Logistics said that the international supply chain business is to be demerged into a separate arm, and that is going to be called as Allcargo ECU. Now, the shareholders will get one share of Allcargo ECU for one share held in Allcargo Logistics. And the remaining, that is logistics, that is going to be held. The remaining entity is to hold around the express as well as the contract logistic business of the company. Now, Gati shareholders, what will they get? Will get around 63 shares of the resultant Allcargo Logistics will get the shares of 63 shares of the resultant company for the shares that they are holding, every 10 shares that are held in Allcargo Gati as well. So yes, on the back of that, we're going to keep an eye out on this one. We also managed to speak to the management as well, and they actually said in terms of, this whole transaction is going to be EPS accretive. What more did they have to say in terms of that? We caught up with the management, Mr. Ravi, so let's go cross and listen in.
If you look at the contract logistics business, has been cash profit generating business with consistent growth over the last 7-8 years, and now it would contribute to the capabilities for both P&L and add to the strength of balance sheet also for the combined entity, and provide support to the express logistics business as well. And combined, they can potentially grow faster, and therefore it should be EPS accretive because profit should expand on the back of this. As far as the international supply chain business is concerned, of course, we look forward to the bounce back in the second half of the year. But beyond that, an independent structure would allow it to use its capital efficiently, and it would allow for also digitization in a better way. And with a sharper management focus, independent board focusing only on that business, we believe that business also should gain better momentum. And therefore, both businesses on a standalone basis should drive better growth going forward.
All right, then let's move on and let's focus to Luris Labs and Kunal. All these pharma counters are showing some resilience in today's trading session. What exactly are you spotting on Luris Labs then?
I believe, Kunal, you're on mute.
Yeah, extremely sorry. So if you look at the December 2022, the levels were at around 415. This counter tried crossing this level almost 5 to 6 times in this entire year, but it was a failure. Recently, in today's session, we saw the breakout of around 415 mark. It's trading near same level itself with a massive volume which aren't seen since last 6 months. So I think, yeah, it's a perfect breakout. But just let's wait for the closing above 415. With the stop loss of 375, one can initiate a buy on this, and the positional targets on this can be as high as 475 to 480.
Okay, keeping an eye out on those levels for Luris Labs. Let's move on and see IIFL. Why is this one in focus? Is there any specific news flow that we have today?
Well, yes, Winnie, IIFL is in focus on the back of two news flows. Let's discuss both of them at a time. And let's start by looking at the first one, and that is 5.8% of the company's equity, which comes up to about 2.2 crore shares, have changed hands in 3 bulk deals on the exchanges today. Now, the stock price is on course for the third losing day, slipping as much as 17% over the course of the last 3 days, down almost 3.5% as we speak. The other news flow is that the company has responded to the RBI's regulations to prevent banks and NBFCs utilizing AIFs or alternate investment funds to evergreen their loans. Now, in response to this, the company has said that the AIF investments aggregating to 909.8 crores of the company do not include any downstream investments to which it has a loan or investment exposure currently or in the last 12 months. Thus, they say that such investments in the fund shall have no impact with regard to requirement of additional provisioning or capital adequacy of the company. So, on the back of these two news flows, you can see IIFL Finance down and out in trade today.
Okay, moving on, and Kunal, another pharma name on your radar, and that is Strides Pharma. Tell us what's the technical setup looking like for Strides then?
Now this counter is trending in not even in just today's session, but we were discussing about this counter somewhere in the beginning of month at around 510.15. This counter is today making 52 weeks high at around 634. I think this is poised for a new rally from here on. The volumes are really very encouraging even in the intraday session and even on the week-on basis. So one can initiate a buy even at the present level. Those who are holding the stock can just trail the stop loss to 600. The fresh buy can also be done at the present level. The stop loss will be 600 and the targets can now be set as high as 700 from here.
Okay, let's move on, and Ankita, talk about GMR Airports Infra. Why is this one in focus? What's the news flow that you're picking up?
Well, yes, GMR Airports and NIIF, which is a National Investment and Infrastructure Fund, have entered into a binding agreement for the latter to invest up to 675 crore rupees in GMR Visakhapatnam International Airport, which is, a special purpose vehicle to develop and operate the Bhogapuram International Airport. Now, GMR Airports and Infrastructure said that the investment is a part of the financial partnership announced in December 2022 between the two parties. Now, this marks NIIF's second airport investment after its investment in GMR Goa International. And on the back of the news flow, we see the stock up a good 2% in trade today.
Okay, from GMR Airports, let's put the spotlight on Indian Overseas Bank. And Kunal, this is the counter that you have picked up. All these banking counters are quite volatile. Majority of them are in the red. But Indian Overseas Bank has been doing quite well in the past 6 months. What are the next targets that you're looking out for then?
So interesting observation on this chart is that again the trend is very much clear and intact. If you look at the March 2023 lows, the counter was trading at around 21, 22, and now it's trading at around 42, which is almost doubled. And still, there is a lot of room for the upside from the present levels. And today, in today's session, it's available near to half of the previous day's level itself. So yes, one can initiate a buy at the present level. The stop loss here can be now at around 40 levels, and the targets can now again be set as high as 50 levels from the present level.
Keeping an eye out on IOB on those levels over there, but let's take a quick look at what the market is doing as well, because yes, like Shrishti marked before as well, the market suddenly gave up all those gains as well. Nifty 50, yes, you saw it went down on the red and now has recovered a bit as well. But in the last 15 minutes also, when you look at it, what is actually seeing a bit of a fall was in terms of HDFC Life, Coal India as well as Bajaj Finserv came off a bit from the day's highest point as well. So these were some of the stocks that were trading quite high, but yes, came off those highest points as well. Other than that, HDFC Life Insurance is what I'm talking about. So let's pull that chart up. So that came off the day's high. But now with the markets, it's flip-flopping between the red and the green Nifty as of now as well. So let's keep an eye out on which decisive side is the market actually going to be picking up as well. Nifty Bank, yes, that's comfortably down, trading in the red as well. We saw that at the beginning of the show, but we saw a sharper fall coming in a short while ago as well. Other than that, broader markets too, flip-flopping. Nifty Mid Cap also was almost in the red. so flip-flopping between the red and the green is what the Nifty mid-cap did. It fell off, again saw the recovery coming as well. So yes, very, very volatile day as of now, what you're seeing in terms of the market as well. Some of the other names that are down and out in trade is something like an SBI Life as well. So market's quite volatile is what we're seeing coming in from there. Let's move on and talk about an individual stock that is in focus, and we have Mantrapuram Finance that's in focus as well. We have a note that came in from CLSA. Actually, there was an analyst meet that happened, and post that they maintained a buy on this one. Target price of 164 rupees per share. They said the management is aiming for a 20% return on equity with 20% medium-term loan CAGR is what they're expecting. They said they're focused on sharing management strategy on non-gold business segments as well, which include vehicle, MSME, home and microfinance as well. The diversification plan with the target of achieving around 50-50 loan mixes between the gold and other segments is going quite smoothly for the company. And the AUM mix also further, obviously 47% is consolidated of the AUM mix is what is highlighted over there as well. So let's keep an eye out on Mantrapuram Finance today, holding on to gains of 1.2% as of now, Shrishti.
To another counter that is still holding on to the gains of almost 2%, and I'm talking about V-Guard. Snehi, tell us what's the news flow here.
Well, absolutely. V-Guard is in focus on the back of a block deal that took place today. The stock was up 6% in the early trading sessions today, but has managed to lose all of those gains. However, it is still trading in the green, up 2% as we speak. Now, a block deal worth 100 crore rupees took place today. Around 35 lakh shares of the company changed hands at a floor price of 286 rupees, which represented a slight discount from the stock's closing price in the previous session, which was around 287 rupees. Now, following this, another 10 lakh shares also changed hands today in 2 block deals. So, a total of 3 block deals is what the stock saw in trade today. However, the buyers and sellers of this stock, of these block deals, are not known yet. So, we will continue to keep an eye out on V-Guard.
Okay, let's move on to the next stock, that is Photex Chemicals. And Kunal, what are the charts indicating for this one? Where are you seeing it headed from now on? What is the target that one should actually keep an eye out on for Photex Chemicals?
See, this counter is again been a perfect trend. If you look at the extreme lows that were around 200 levels somewhere in the March, and recently it's trading at around 345. And this trend is very clearly positive. And even if you look at the last 6 months' time, I think this counter has been making a clear higher top and higher bottom. I think this is a present level being the perfect on support level. One can initiate a buy, stop loss can be 335, and the targets can again be as high as 400 levels. Those 400 levels are based on the previous high, which we witnessed somewhere in August 22. So yeah, it's a trending counter. One can initiate a buy even at the present levels.
Okay, you can look at Photex Chemicals at the present levels as well, is what Kunal is saying. Let's move on, talk about Godavari Power and Ispat. This one is in focus after the company has actually received an approval from the Chhattisgarh Environment Board, Conservation Board, which is the consent to operate an enhanced capacity of the steel melting shop, SMS, which is called from 4 lakh metric tons per annum to 5 lakh 25,000 metric tons per annum at its existing plant, and this is in Raipur, Chhattisgarh as well. Now, with the approval for the consent to operate at higher capacity, the steel mill manufacturing, the sponge iron manufactured by the company shall be 100% captively consumed by the company, which will lead to a value addition and improvements in terms of the operating margins of the company. So on the back of that, today we're seeing Godavari Power Ispat holding on to strong gains, 2.5% uptick in such a volatile market.
Stock from the broader market space that is in focus is KPI Green and Snehi. This stock is also holding on to the gains. Tell us what's the news piece here.
Absolutely, Shrishti. Stock is gaining in trade, up 2% as we speak. Now, the company's wholly owned subsidiary, which is KPIG Energia Private Limited, has bagged new orders of 1.8 megawatts for executing new solar power projects. The subsidiary has received the order from Messrs. Radha Mohan Dyeing and Printing Mills. The projects are scheduled to be completed in the financial year FY24-25 in various tranches as per the terms of the order. Now, with this order, the company's cumulative orders for solar power projects till date has crossed 151 megawatts as we speak. Also, the another piece of news flow here is that the company's board has met earlier in the day today to mull about the QIP that they had issued a few days ago, and it closed yesterday. The board has approved to issue 25.3 lakh equity shares to eligible QIPs at an issue price of 1,183 per share. So on the back of both of these news flows, KPI Green is in focus today.
Okay, let's move on to the next one. And Ankita, you have picked out Infosys for us today. Why is this one in focus?
So, Vinny, Infosys is in focus today because it has entered a 5-year collaboration with leading auto parts distributor LKQ Europe to transform its business processes. And in this new deal, Infosys will be integrating multiple strategic acquisitions that LKQ made to harmonize business processes, improve product availability, and enable faster delivery to the end customers. Now, this is yet another long-term, long-tenure deal from Europe region in the ongoing quarter. Remember earlier in October, Infosys had reported a 5-year deal with the electric EV maker Smart Europe GmbH. Now, the IT major at present is seeing its highest ever large deal pipeline, having reported $7.7 billion worth of large deals in the pipeline in the second quarter ended September 30th. And on the back of that, we did see an uptick of 1% coming on Infosys. Right now, it has cooled off, and right now it is up 0.7% in trade.
All right then, and moving on, and Kunal, Geo Financials is the counter that you have picked up, and the stock has been on the roll from the lowest level of 215 to 20 levels. The stock just a couple of days back was seen at 240 odd levels as well. But are you still a buyer for Geo Financials? Do you still have that bullish stance?
So as you rightly said, this counter actually rolled up from 200 levels to almost 250 levels, and now it's been in sideways consolidation. If you look at the price action since the inception of this counter, this is making a massive curve formation, and this curve formation, every decline can be taken as a buying opportunity. So yes, at the present level, I am a buyer on this. The stop loss on this can be placed at 225. I think the first target of previous high, which is at around 265, can be expected, and beyond that, we'll keep revising the targets upward.
Okay, let's move on. And Snehi, you picked out Sansera Engineering. Any specific news flow here today? What's keeping the stock abuzz?
Well, Vinny, the news flow here happens to be a block deal for this stock as well. About 12 lakh shares or worth about 115.8 crore rupees have changed hands on the exchanges today. However, the buyers and sellers of this block deal are not known yet, so we will continue to keep an eye out on Sansera Engineering. What's key to note is that the stock is just kissing distance away from its 52-week high. The stock saw a sharp gain early in the morning today in the opening session, but has managed to lose all of those gains. However, trading with an uptick of almost 1% in the green.
All right then, let's put the spotlight on Metropolis Labs. And Kunal, with the rise in the COVID cases, that sentimental impact was seen in Metropolis just yesterday, and the stock has been doing pretty well. From the diagnostic space, this is the stock in your focus list. Are you still bullish on Metropolis on technical front?
So if you look at the overall diagnostic sector, in fact, all the counters are doing really good since last 5 to 6 months. And if you look at the Metropolis Lab per se, this counter was trying to cross a 750 mark. I think since last 1.5 year, it was a failure. In today's session, it made a high above 1750. But yeah, it has slipped a little lower, and kind of profit booking was seen. So it's a conditional buy call as of now. Let the counter give a closing about 1750. I think one can initiate a buy at that point in time. The stop loss will be 1650, and the target can then be as high as 1950 to 2000 levels. But we'll be initiating a buy only on the closing above 1750.
Okay, keeping an eye on those levels for Metropolis Healthcare. But, that was the last stock for today, stock number 35. Thank you so much, Kunal, Snehi, as well as Ankita for joining in with us. It's always a pleasure having you on the show, and a happy long weekend to all three of you all as well. With that, the stock market regulator, Sebi, has actually indicated major reforms in the financial market. In this report, ET Now's Ankur Mishra actually states important regulatory changes that Sebi is likely to take and make in the year 2024 as well. So let's go across and look at this exclusive report.
If 2023 was of changes with reduction in IPO listing timeline to 3 days, T+1 settlement, 2024 is going to take a giant leap in terms of market regulations. And the regulator has planned the biggest of all changes in terms of instantaneous settlement, which will allow trade as well as settlement in just one click or one touch on your mobile. Instantaneous settlement of trades is going to be the biggest reform of the sector in 2024. Sebi chairperson Madhvi Puri Butch has said that instantaneous settlement is possible within a year of T+0 implementation. This means trades will be settled on the same day by March 2024. As of now, the settlement of trade happens on a T+1 basis. Not only instantaneous settlement, but market regulator is also keen on flexibility, safety and choice of investors, and hence in 2024 you will see SBA-like facility for secondary market and also demat nominee changes which will come into effect. SBA-like facility is likely to be implemented for the secondary market. Currently, it is available only for primary markets. It will safeguard investor assets from misuse by brokers, default and consequent risk to their capital. Also from 1st of January, nominee in demat accounts is mandatory. All demat accounts will have to furnish nomination or opt out of nomination by January 1st, 2024. Otherwise, their account will be blocked for trading. In 2024, market regulator may also take measures to regulate finfluencers, appoint more financial intermediaries, and make amendments in delisting norms.
Right, and as we step closer towards the year 2024, let's get a stock of what the market honchos are expecting from the market. Listen in.
A bull market like this will lead to excesses, will lead to overstretched valuation, will lead to unnecessary confidence, will lead to perhaps sometimes regulatory changes that are important or regulation changes that are important being pushed aside because the market is doing so well. So we hope those mistakes don't happen. But there's a lot to be thankful and a lot to be looking forward to be optimistic over the next few years than rather be pessimistic. But broadly, a well-managed company, whether it's in small cap or large cap, is still a good investment opportunity and I would remain invested in them.
While we've had a stellar CY23, I think CY24 should continue, with that strength, and we should be expecting, strong double-digit returns for the Indian markets in CY24. Unless something goes wrong terribly globally. At CY24, we'll see strong foreign inflows and many of the global mandates. I'm not talking about the emerging market mandates because emerging market investors, have India as a part of their benchmark, about 16-17%. So they are following Indian developments pretty closely.
You have to be a little cautious as we go into 2024. This exuberance could continue for a while, but I think I leave enough on the table for the next person to actually get there. What you also need to be conscious about is try and navigate a portfolio, your current portfolio, towards more sustainable long-term trends. Which could be volatile near term, but you should have enough of conviction to double down on your position if things go wrong. Okay, so behaviorally, that's what most investors are apprehensive of doing. They sell when it's low and they buy when it's high. But double down on your position and find the conviction to do that. I think that's how I would approach 2024 going forward.
Those were the top market voices, what they are expecting from 2024 as well. But with that, we're absolutely out of time with this edition of Market Fatafat on ET Now. A very Merry Christmas to all our viewers out there, as well as a happy long weekend to you all from Team ET Now. So do enjoy your Christmas. We'll be back after the long weekend. And with that, it's a wrap on this edition. So goodbye from Shrishti, myself, as well as the team who put this show together.